But pretty good day today. A little tricky at times. However, our bread and butter model played out really nice over and over again today. So real quick, let's just recap. Okay, this is important to go through because I want to drill this in your guys' heads. Let's recap. Everything we've put together in the previous episodes. Oops. So, well, first psychology, right? That was the main episode. Obviously, without the psychology, without your ability to manage risk, follow your rules, keep leverage in check, respect daily loss limits, these kind of things. Without everything we talk about in episode 1 of the mentorship is still the most important episode. Without that, everything else doesn't really matter. No matter how good your model is, no matter how good your conviction, nothing. Okay. Five and 15-minute structure and order flow, whatever you want to call it. Some people will call it structure. Some people will call it order flow. I don't care if it's proper. You know what I mean, right? So 5 and 15-minute structure. How is price respecting 5 and 15-minute PD arrays? Are we rejecting them? Are we holding them? Are there untapped ones we could target? The 5 and 15-minute structure is really important, especially if you're somebody like me that trades off of the 1-minute chart. Now, of course, this could all be fractal, but I'm just sharing with you, obviously, throughout this mentorship, what has made me successful and the way I trade. And this is it. So 5 and 15-minute structure is my bread and butter as well. Of course, we're paying attention to higher time frame, 1 hour, 4 hour daily, key levels of interest. But 5 and 15-minute structure and order flow is going to kind of guide us through the market and give us our high probability setups. Right? Time levels. Midnight Open, New York Open, TMSO, sometimes DTT routes. Okay, so when we combine the 5 and 15-minute structure and order flow with time levels, that's when we start to see high probable setups, right? And now we add further layers to it. The Q3 inversion model, which of course is my bread and butter model, right? You guys know that. So if we add 5 and 15-minute structure, time levels, Q3 inverse, all together, and we also have our psychology locked in. Again, this is the most important thing. Psychology is going to be the most important thing. None of this stuff is going to matter until you guys really understand the importance of daily loss limit, accepting losses. And we'll go through that today. I'm just show you some of these trades that we took today, or even just the Q3 model. Even if you were to take losses prior to those trades, the trades were so good that they would have made up for those losses and more, right? So, again, I want you guys to keep all this in mind as we go through the charts today, okay? Because you're going to see all this come to life. So, market opened up. So we had a overnight session, just kind of opened and went lower, created a bit of a rounding buy model here up towards the new day opening gap. We had our London high here, so it's a point of interest, right? And what did we have here? 5-minute SIBI. So this 5-minute SIBI, if you look on the 5-minute chart, this is something we want to be marking out prior to market open, prior to New York open. We want to be looking at any potential 5 or 15-minute PD arrays that are in key areas, right? Which new day opening gap, which is what this gap is here, this on the chart, has this 5-minute SIBI kind of nestled inside of it. Also, what do we have? We have London high. also hanging out inside of that, right? So when we see that, so this is why, when we hopped on stream, don't know if you guys remember, but I told you guys I'll be looking for a pop to short because I want to see price go lower. We have a lot of liquidity here to run. So the 5-minute SIBI paired with what? Time level, TMSO. Because we got this open here at 9:23, right? Before the market open. That's our TMSO for this 90-minute cycle. We have London high here, which was swept prior to New York open. TMSO prints, we open up, and first minute we pop up, and that's when we did our turtle soup. So because we closed below TMSO here, we swept London high. We have a 5-minute SIBI also paired with new day opening gap. That gave us a nice confluence to at least give the short turtle soup a try. Okay, so I went short here on this pop, and of course in hindsight, it looks like I could have held for all day long, but I ended up just taking it for a base hit. Again, holiday week, I'm taking things for base hits. So New York Open, Midnight Open, these are nice targets for that short. Still, not a bad short by any means, 30 to 50 points. And then price just continued to sell. We ended up creating a large 1-hour SIBI right on the way down here. Price just went straight down, came all the way down to this 4-hour BISI. So this is where it's important to keep our higher time frame levels in mind as well. This 4-hour BISI right here, having this marked gave us nice confluence to potentially try longs right away from it. Some of you guys got long early here. I went ahead and waited a little bit. Waited for our Q3 inverse. So here's Q3, right? So the key here, you guys, is to remember we have to anticipate these setups to form before they happen. Okay, because if we're anticipating them to form before they happen, it's going to give us more confidence when they actually start to play out. And we're trying to go with the flow of price. This 4-hour BISI gets priced into. Obviously, we sold 300 points straight down into it. Get a nice push out of it inside of Q3. This gives us a high probable chance to take this long, right? So we get this inversion. I entered a bit late. I think it was like right around this candle. But any entry in this area is nice. And you could target. There's plenty of options here, Candle bodies, internal liquidity, this internal liquidity, even bearish PD arrays. Lots of good targets there. So this one played out really nice. We took this one as well. So we took the short. I closed the short here. Took the long, Q3 inversion model. Really nice. Again, anticipating the push from the 4-hour BISI. That was the key, right? That gives us the confidence to take that trade. So then price comes up. We start to just kind of flutter around. We enter time distortion from, right around 10:30 all the way going into lunch. So this was all just time distortion here. Not really a lot of good trades inside time distortion. Now you can still trade it. I mean, I think there was a few people in the stream that took this Q3 inversion, but in theory, this came up. We did sweep this. Oh yeah, that's right. I remember now. I remember I took this as a turtle soup short. This wickless candle. So we took this turtle soup short. The Q3 model did end up playing out a little bit. Just pretty messy, right? Because it is time distortion. So not a Q3 inverse that's very clean, very easy to take. The only reason I took a short here was because I was in the soup. I was trying to soup this candle, this wickless candle. Otherwise, I probably would have stayed out. If I didn't have the short from here, I probably would have skipped the short. In theory, stop does go above the high. So, if you took the short from this Q3, you still would have, you had to sit through a little heat. About 20 points, so not horrible. But taking that, you could have targeted, internal liquidity here, or even this 1-minute PD array. Of course, I sold it at this internal liquidity, and we just sat on our hands there. So not a lot of good trades inside time distortion, but still nonetheless, Q3 model did play out, even though it's kind of nasty. The next Q3, this is the one I sat out. So this is the one where I was hoping for, I don't know if you guys remember if you were trading on stream with me. We had this 1 hour SIBI formed, right? I was hoping, obviously we're engineering liquidity here. This is another thing that you guys always want to pay attention to. You guys will notice me draw these lines out on stream when I'm seeing this engineered liquidity, because this is all getting, priced in to sell through. So this is engineering liquidity to take at a later time. So anytime we see this, and we're still bearish on the day, so I was still looking for sells, right, while we're grinding up. I was hoping we would have gone up to the SIBI and then got a Q3 inverse and sold off. They did not get up to the SIBI. They ended up just rejecting here, sweeping this internal high. Q3 inverse did play out. I know a few of you guys caught it on stream, so that was cool to see some of you take it. I did skip this one simply because of that SIBI. I was iffy on that SIBI. But nonetheless, sweep of liquidity, Q3 inversion. Beautiful close through both Q3 premium fair value gap, right, and TMSO closing below for extra confidence if you front ran this short. So that was really nice. And again, you could target, lots of different targets here. Candle bodies, internal liquidity, candle bodies. Again, this is just another example of why we target candle bodies and not wicks. Okay, I mean, you can target wicks sometimes, but if you want high probable targets and you don't want to get stuck, candle bodies are the key, and that's why this model, I built it to have these are the targets. Okay, bodies. Because if you would have been targeting the wick or the lows, we'd have got left behind, right? This example presents itself every day. I think it's really important to understand the way the market moves and taking the the majority of liquidity in the bodies. So this Q3 played out really, really nice. Target here, target here. Entered some more time distortion. I did try to fight with this. I was trying to catch a long in this. I took a little stop and then a break even. It kind of shook me out a bit, but it did ended up going because I was trying to target that 1 hour SIBI, right? Because I still wanted to see us price in that 1 hour SIBI since it failed here. We were anticipating this to just be a retracement. A very nice one to still trade. Again, you can trade both manipulation moves and distribution moves, especially with the Q3 model to kind of guide you. So I got chopped up trying to catch a long right here. I think I took a loss and then I took a break even. So kind of just sat on my hands after that and just told myself I was going to wait for that 1 hour SIBI. Price did finally expand away from this time distortion area. It did reprice into that 1 hour SIBI. And this is really, really nice here. Did you guys catch this on the PM session stream? Did anyone catch this Q3 inversion off this 1 hour SIBI? That's in this class right now. Someone had to have caught it. Nice. Okay, good. Yeah, yeah. So I also took it. I targeted just this liquidity right here. Did not hold for lower, but it did squeeze out some more points. You could have targeted this PD array, this internal liquidity here. But yeah, see, again, keys here are anticipating all this, right? We have to be anticipating price. As it's pushing up into Q3, we have to think, okay, if it's pushing up here, it's pushing away from this time distortion area. What is it after, right? What is it after? No, it doesn't matter, Duke. It could be large, small, doesn't matter. All that matters is the signature. And let's go through that signature because, again, there's key points here, right? Price is expanding away from this time distortion area. We have this high here that it left, right? It left this high. And the main thing was the 1 hour SIBI that it left, right? We were waiting for that SIBI. As soon as price tags into this SIBI and sweeps this liquidity, we need to have, light bulbs going off. Why? Because it's pushing up into our key levels right on time for Q3, right? This stuff is not random. Spent a lot of time building this model, and there's a reason why it's so effective. You see this push up into Q3, key level gets tapped that you've been waiting for, sweep of liquidity. Again, fair value gap made in the premium here of this leg, right? So any fair value gap inversed, you know, in this area is good for the Q3 model. So rejection of 1 hour SIBI, inversion here, you even get a nice retest. This one is like textbook right here, very clean. Comes down. Again, I just targeted the candle bodies here, being pretty conservative today, but still nice trade. Even if you took it there, you know, nice 30 points right there. Could have held for TMSO, didn't quite get to TMSO. This 1 minute BPR held it up. As you can see, the bodies held this BPR. So price still wanted to expand higher. But again, nonetheless, you can still trade these moves, right? You can still trade the manipulation move back down. Again, especially since it's the Q3 model presenting itself with the checkboxes, right? So then we made, again, what did we talk about at the beginning of the mentorship? Psychology, 5 and 15-minute structure, order flow, time levels, Q3 inverse. 5 and 15-minute structure and order flow. Oh, you exited for 34 points. Nice. You actually squeezed out even a little bit more than I did. Nice. Yeah, that was a nice one. So then we got this 5-minute BPR that forms here, right? This was a 5-minute SIBI. This created a 5-minute BISI on the way up, giving us that 5-minute BPR. So this is something we need to pay attention to, right? 5 and 15-minute structural order flow. Price comes back up. We resweep all this liquidity, reject that 1 hour SIBI again, but this time we now have this 5-minute BPR, right? So these are clues that you could be building going into the next Q3, even if you weren't trading any of this mess here. These are clues that you could be building, again, anticipating what might happen going into Q3, right? We slowed down into here. We had an aggressive buy right out of this 5-minute BPR. Not really any sign of weakness at all there. And we get a new Q3 right here. Now this one plays out yet again. Pretty tricky. This is why to take this one, you would have needed to make sure you had your 5-minute BPR marked out. If you didn't have this 5-minute BPR marked out, this Q3 is much more tricky because you don't see where you're delivering from, right? The only difference with the BPR and the inverse fair value gap is the BPR just doesn't have any wicks overlapping anything. So, like, see right here, you have a little BPR. And actually, let's go back to this one. It makes it easy. See how there's no wicks overlapping these two, so it's just straight bodies, right? That would be your BPR, which essentially does become an inverse fair value gap. So the only thing that makes it a BPR is just no wicks. So a lot of times BPRs could be a little bit more high probable, because usually there's trapped orders inside there. Yeah, the end of day Q3 is very difficult. I always say that's the one that you have to kind of expect a little bit of scam action, right? But again, if you build clues, you know, based off what we talk about, 5 and 15-minute order flow, price aggressively pushes away from this 5-minute BPR. Even the second time it taps into it, immediate touch, immediate bounce, right? So price is obviously some sort of objective higher. It wants something higher since it's respecting this with violent reactions. We go into Q3 here. Again, this one you'd have to use the clues of that 5-minute BPR holding. We get that inversion here right at the start of Q3. You get one chance at the retest, potentially a second one if you didn't get in, but this one, I mean, there's not really a nice target here, you know, because all you have is just a bunch of empty, you know, a lot of imbalances here. Like, so price could reject, you know, anywhere in here, but you know, if you took this, you could have gone break even there. That would have been your nice break even point. And could have just taken it as a scalp on the pop at 350, right? Just knowing that that 350 offered a nice pop, 30 points or so. Came back, you could have entered again, you know, take it at the high. Just a nice scenario there, because what happens here as well? What gets respected, right? What gets respected here? TMSO. So price inverse is Q3. This can add even another additional point of confluence for your entry, right? TMSO. Expecting TMSO to hold here. And the bodies hold it really nice. Again, TMSO is typically used as turtle soup level, right? Or a pivot level, or a target. One of those three things. We use it as a turtle soup level on the morning short, right here. It's a nice example there. And as you can see, nice pivot level here, breaking through, giving you nice confluence. Same with this, pivot level, breaking back through, holding above. So, good use of TMSO. Today was actually a really nice textbook example of some Q3 trades utilizing both the 5 and 15 minute structural order flow and TMSO. Really nice. We caught most of them. The only one I did not catch was this one. This one was tricky, but I know some people did caught it. Some people caught it, which is nice. But yeah, pretty good day overall. You know, not bad for a holiday week, Thursday. You know, tomorrow we got some interesting structure. So, but yeah, I just want to go through with that with you guys. Just go through our, you know, everything we've talked about in the mentorship so far. I just want you guys to see it all being pieced together on the charts here and how to anticipate these setups forming before they happen based on, you know, higher time frame PD arrays, 5 and 15 minute PD arrays, and liquidity levels, time levels. Okay. We're getting a push up into Q3. You've seen this and you're still potentially looking for a sell. You don't need to even try or worry about shorting any of this run up, right? A lot of people probably got caught trying to short, getting wrecked here, right? In the SIBI. There's no reason to do that. Why? Because if we're going to get the short, well, if the short's going to come here, we have Q3 to rely on it, right? We don't need to try to fight, you know, before the model happens. You're better off just waiting, because if the short's going to come, it's not going to happen. It's going to be inside of Q3, right? So trying to short the SIBI right here, you're just asking for trouble. It's too early. That's the beauty of having these models. Is it gives you a little bit, just a slight bit more edge on anticipating, you know, just letting price go and just making peace with that. Waiting for the signature to happen, waiting to reject 1 hour SIBI inside of Q3. Now you get the chance to short, right? I don't mind trying to turtle soup. Like, I don't mind inside Q3 trying to take a short before the model. I do that sometimes. But before that, you don't want to get caught. You don't want to get caught trying to short before that. And here, you know, same thing. Just wait for the model to play out, right? Wait for the model to play out. Trying to long anything in here, you're asking for trouble, right? Nice, 369. Love it, man. Yeah, the 5 and 15 are my best friends on the charts, for sure. 5 and 15. Of course, like I said, it is important that we mark out higher time frame as well. It doesn't mean we just negate higher time frame. But as far as trading, you know, base hits, you know, 30 to 60 point moves, 5 and 15 minute order flow gives us a lot of clues. Also, the reason why we use 5 and 15 minute order flow is simply because we trade the Q3 model off the 1 minute chart. The Q3 model is built off the 1 minute. So if we build the Q3 off the 1 minute, the 5 and 15 minute are going to give us clues on which Q3 models might work, right? And then you add TMSO, and there's your chef's kiss. So, but that's pretty much it, guys. Just a quick little rundown. If anybody has any thoughts or questions, I'm happy to go through anything on the chart. But I did it. I did it. 30 minutes. But the main thing, guys, I just want you to really understand. I know it may seem repetitive, but it's so important to really understand the price anticipation, right? Anticipating what might happen in Q3 based off where price may be going and where it's delivering from. So you don't get caught trying to take subpar trades prior to the Q3 model, right? It's just easier to, you know, same thing here. You know, trying to short here is tempting. You know, this is, you're getting this low resistance liquidity, right? It's juicy. You're like salivating to take a short. Well, you know, if you took a short here, you know, this candle stops you out and now it goes in your direction, right? Versus if you just wait for the Q3 to give you the signature, you know, you still would have been able to catch that short without having to take any heat from that candle. Yeah, Kelly, missing that drop this morning. Had you off. Well, I mean, I was even a little salty. I mean, I literally turtle soup this wick right here. My fill was like right here. But again, in hindsight, yeah, it's like, oh, yeah, I should have held. But holiday week, man, I don't like to press my luck too much. I'm happy with 40 points. Can always average up if you catch a runner or two. But yeah, you missed this morning move. You don't have to. The main thing is, I did not FOMO in shorts here. I took my short. I took my base hit. I did not FOMO in shorts. I just simply waited. The whole time on stream, I was like, nope, we're just gonna wait. We're just gonna wait for the long, right? Just wait for the long. We missed adding more shorts. We caught some of the short. No reason to keep trying to add shorts here and just keep chasing it. It could have worked, but you're just playing with fire, man. Because a lot of times that won't work out. You're better off just allowing price to reach your next point of interest, because it's not going to go down forever. Okay. Wait for that next point of interest. We get this point of interest and we wait for the Q3 model to give us a setup. Would you always take the first fair value gap in Q3? I thought it was 2.11 fair value. The roots inside might be a little better. Yeah, it depends. So like this one, I took this candle long. So I sat in a little bit of drawdown. It wasn't bad. But this one, if you would have just slapped it, that would have been nice. This is one that gave a retest. That's kind of going to be different for everybody. If you have a time level inside here, I mean, that's always nice, to add extra confluence. But it's going to be up to you and your risk tolerance if you want to take the entry as soon as you get the inversion, or if you want to be okay with missing some of them and have a better risk reward and wait for the retest. Right? That's kind of up to you and your sizing. It can depend on your sizing as well. There's a lot of factors there. But nonetheless, I don't mind either option. Either option. Sometimes I'll even do both. Sometimes I'll even take one here and then I'll add right here. But it kind of depends, again, on your risk tolerance. But all right, guys. I will go ahead and wrap this up here. That is 30 minutes on the dot. Hope it was somewhat helpful. Again, just wanting to recap everything we've been talking about and mostly go through. I just wanted to talk about anticipation today. Anticipation on what might happen inside of Q3, and to not, to have patience, not jump the gun, not try to, be a hero and, take the trade prior to the model setting up, right? Because both times, if you would have tried that here, you would have tried that here, and you would have tried that here, you would have been stopped right before the model. So patience is key. All right, guys. I enjoyed hanging out and trading with you guys today. I will see you guys bright and early tomorrow morning at the bell.